Well, thank you very much, Frederic, for setting the mood for the conference. And I have to admit, this being my first as Director General, I've been looking forward and dreading this moment a little bit. But I'm really happy that I get to be on stage with Thierry, because he was actually one of the first CEOs who welcomed me in my new role. So thank you for being here today. And for talking about your visions, but also what you are doing in SCOR. So turning to that, you took the helm at SCOR in 2023, and you recently came out with your report for 24, which was very impressive, your activity report. What have been your top strategic priorities so far, and what does it look like when you're looking ahead?
First of all, good morning, everyone. Also from my side, it's a pleasure to be here, and I wanted to thank Insurance Europe to give Reinsurance the stage first. I think that in the room, everyone understands that Reinsurance is one wheel in the bigger machinery of insurance. And like every other wheel of this machinery, it needs to be well oiled. And I will not repeat what Frederic has laid out for the whole industry overall, to make sure all these wheels are well oiled and play well together to make insurance something really relevant and working well. I think there's one thing that people forget, and I wanted to bring this to the attention of everyone in Europe. Reinsurance, European reinsurers today are a global champion. We hold about half of the world market share. So European reinsurers have about half of the worldwide market share, which is a very prominent position. So I would like to just use 1 minute to say that this is something that has been reducing over the last 20 years, and it will probably continue to reduce in the next years. It's nobody's fault, really. There is some normal competitiveness at play here. But I think you should never forget that this is a global champion. It's going to grow in the next 10, 20 years well above GDP. So as Europe is talking about growth, that is a growth industry. We are a world champion. And I think that there should be particular attention given to the European reinsurers. It's a relevant industry. Now, turning to SCOR and to your question, for me, when I took the helm of SCOR, I was looking at the company, and I felt it's a relatively static company after 20 years of interest rates coming slowly down and of a relatively benign environment. I do remember 15 years ago, a big French insurer came to speak to some reinsurers. The CEO of that company came to talk to us and was more thinking about, will reinsurance be relevant still in 10 years, right? So that was a bit the mood. I think today reinsurance is fully back, but you cannot be static in an environment that Frederic described already as volatile, uncertain, right? So what I did was everything around this, moving the company from static to dynamic. So people, organization, leaner organization, more delegated empowerment, clear accountability, so the organization streamlining, but also more dynamic capital allocation in the group, ALM, improvement, treasury, all of this, the usual. But I think it's a very strong move that we have made in the last 2 years, from static to, I would say, relatively dynamic. We still have 2 years to go, but I'm very positive on the change that we have started.
So you say that the European reinsurance industry will grow, but that we're also facing a significant global competition. So how do you see the reinsurance industry facing some of those global challenges that we're seeing, climate change, cyber threats? There's a lot of things coming at us. How do you see the reinsurance, especially the European reinsurance industry, tackle and maybe make use of some of those opportunities?
Yeah, so some of what I will say, it does not apply only to reinsurance. Some of it is also relevant for insurance. But I think as a whole, the environment we are in, and I think the environment we are facing in the next 10, 20 years, more uncertainty, more volatility, I mean, climate change, digitization, all the geopolitics around us. I mean, clearly risks are on the rise. That's a trend. It's like a tidal wave going up. So I think demand for reinsurance is clearly up. I think as an industry, insurance and reinsurance, we're actually perfectly equipped for such an environment. We understand risk is our business, so we understand risks. We are used to facing new risks and trying to put the price on a risk, finding ways to absorb that risk through diversification on our balance sheet. That's the basic nature of our business. So you're not afraid of an environment that is more risky. It's an environment we actually quite like, because it makes our job and our company even more, our industry even more relevant. So I think that reinsurance and insurance must be, in these uncertain times, actually the safe haven or the rock in the stormy sea. And I think we are perfectly placed for that positioning as really an industry that supports resilience.
So if we look further ahead and we look and try to predict the future, Frédéric was saying that he wouldn't have been able to predict what AI would be now 2 years ago. If we're looking to emerging risk, are there things that we as an industry, reinsurance, insurance, are not fully prepared for that might come at us and that we haven't fully priced into our models and other things at the moment?
Yeah, that's a good, I think it's a very, very relevant question. And Frédéric mentioned the whole cyber space, so I definitely think that we are only at the beginning of that whole digitization. With AI, there's even more new type of risks and needs for cover coming our way. So we will be challenged to find the right solutions to it. But then, have we really seen the cyber cat events yet? No, definitely not. We haven't seen the Tokyo earthquake in cyber yet. It's going to happen. It's only a question of time, and so we will learn as we go. Frédéric said there is always an unknown, and I totally agree with that. Cyber has a lot of unknowns because we are at the beginning of the journey, but we have to lean in as an industry. We have to show leadership. We have to show, particularly as reinsurers, we have to show appetite to cover the risk, right? Which means we take risks, more unknown risks in cyber. But I wanted to mention another thing, and I think it's underestimated by the whole industry. I think that diversification is everything, isn't it, in our industry, particularly in reinsurance. All we can offer is actually diversification, right? That allows us to offer much more efficient products and capacity to our clients. Now, diversification is basically decorrelation between risks. So there's no correlation, should not be, between net cat and mortality trend, for example. So these are decorrelated risks. So generally, we have been in a world of relatively clear, static decorrelation. I think, however, that over the last years, not the least with international globalization, but also with digitization, there is a form of recorrelation happening that is happening in a very subtle way. And it's something to watch for our industry. So it's not dramatic. It's going to come a little bit like climate change, step by step. But this recorrelation is a dangerous one and will be very challenging to see. So we can look back, but it's only going to be a partial answer to the future in this regard. So correlation, decorrelation is an unknown for me in going forward that we have to watch as an industry.
So if we have this conversation in a year, or maybe next time we come back to Brussels, we might be able to see some of those trends have materialized even further.
I'm convinced.
Okay.
Yeah. Because all we know right now is that when you look at this polarization and digitization in the world, right, you have something that connects and you have something that polarizes, right, going two super strong forces at the same time. So all I can say is these trends will continue. So polarization will continue, but at the same time, this connection will continue too. So interdependencies will increase, and at the same time, states will fight it, to build walls and protection, and these are two very big forces that will come with very uncertain results tomorrow. But these trends will be visible in 1 year, in 2 years, and 3 years.
So picking up about the trends and the challenge, we have a patchwork of regulatory frameworks across jurisdictions. Do you see that we need greater alignment across EU and other jurisdictions so that we can increase, well, we talk a lot about European competitiveness here, but I know you see the world maybe a little bit more through a global lens. So let's talk about global competitiveness.
No, very happy to. So I think that in Europe, the path we have engaged on already for decades is one of economic regulation. I think it's very, very good, and I think we have to keep going on that path of a risk-based economic regulation. I think anything uneconomic, like floors, non-economic floors should be avoided, in my view, because it doesn't fit the purpose and the model. But I'm fully supportive of an economic framework. I think it's never going to be perfect. We will have to adapt it, and that's what we do with the Solvency II review. We can debate it. Is it going too far, not enough, and all of this? I get it, but it remains an economic framework. And it's true, when I look globally, that a lot of the world's biggest countries move to economic frameworks. So that's good, because it kind of really more or less naturally aligns the playing fields. Now, there are countries, not the least one, the largest one, that in terms of insurance market, that is non-economic as a regulatory framework. And it does lead to distortion in competition that are very large. Now, in a lot of the risks, I think, thanks to internal models and the way we have framed Solvency II, it's okay, we can compete. So we don't blame regulation if we lose market share. I blame my team, right? And not regulation. However, on assets, guarantees, a regulatory framework that is economic will be very punitive for any asset-related guarantees. If you're in a non-economic environment, you can just take as much as you want, right? Put whatever assets you want behind it, and it will make you massively more competitive. So that's an area I think Europe has been waking up to over the last 12 months. And I've been warning Europe already for a while that if you compete in this asset-rich, asset-intensive with guarantees environment, a non-economic framework will take over the other one, right? So we need to put some barriers there, I guess, to prevent all the assets to leave Europe, because if we want assets to stay here, to be invested in Europe, we have to watch that space. I don't want to be too alarmist. Generally, I'm not, but on this one, I am a bit alarmed.
So given that we've got regulators and policymakers here, Solvency II, what further changes would you then ask for, put on the wish list, and see that we need both as a reinsurance and insurance industry?
Yeah, so you will be maybe surprised, but I'm quite satisfied with the regulation, Solvency II. We've been very strong supporters of an economic scheme like Solvency II. So we really welcome Solvency II. We did welcome it before. We think it needs continuous work, and that's what we see happening. So our message is: make sure it stays economic. Don't introduce non-economic barriers that could actually really have an impact on our competitiveness, and particularly reinsurers, right? They live off diversification. That's only possible if risks, everything can go on one central balance sheet, where it then needs to be diversifying in an ideal way. And so for this, we need access to these markets, right? So you have to help us as much as you can to keep global access to all the markets so that we can bring the risks to our local or to our main balance sheet, and then keep the internal model for reinsurers alive in an economic way as they are today. These two ingredients are today given. I can't see much risk on the internal model, but in terms of trade barriers worldwide, they're going up. And that is not a risk, but that is certainly reducing the efficiency of reinsurance. But I'm not particularly worried at this point in time. Maybe you will be surprised, but I'm quite okay with the framework we have.
So I think we've got some regulators on the front row who are not unhappy with that message, Thierry. So thank you for that. If we then turn a little bit away from the legislation and the regulatory space, and we look at the increasing, and we'll talk about it later today as well, the increasing debate about the insurability of climate change, of catastrophe risk in Europe. How do you view that emerging space from a, well, there's been talk about a potential EU-level partnership, but I'm keen to get your take on that because I know you see that also from a global lens.
Yeah. So I will probably be a bit more provocative than Frédéric on this one. You know, the way I see it is, natural catastrophes are with us for hundreds of years. Reinsurance exists since, you know, more than 150 years. It's an industry that has been going through wars and you know, multiple huge earthquakes and devastating natural catastrophes. We have worked on our models for decades, refined them. We have balance sheets today that are again economically permanently optimized to make sure that diversification is maximized to be able to not only cover all of the risks that arise, but also to put the most competitive price on it. And we do this under utmost competitive conditions, right, for decades. Okay, and here is Europe now wanting to create a monoliner, totally undiversified, with no history, putting a price, I don't know how, in a non-competitive environment, probably, pretending that this could be more efficient than the reinsurance industry. Now, all I want to say is, I would really caution Europe to do this, because we can see in the world similar undertakings that have failed multiple times, always for the same reason. So if you think that because you don't like climate change and the impact on prices for homeowners, I understand nobody likes that, but it's nobody's fault, right? Climate change is a fact, and prices as a result will go up. So if you think naively that state-owned regional monoliner is the answer to it, it will fail. It will fail. And here I will even allow something more. Today, the industry, the regulators, everyone can blame the reinsurers, right, for the prices to go up. If that reinsurer becomes state-owned, politically owned, they can't even blame anymore anyone else, right? They have to blame themselves. So you cannot hide. I'm just telling everyone, you cannot hide. We have an industry today, and the European reinsurers are world champions in this. It's highly efficient. I'm in this industry for more than a quarter of a decade. It's highly efficient. You cannot compete against it. And I will tell you one more. We have plenty of capacity for European risks. There's absolutely, whatever you hear, there's absolutely no shortage of capacity for European risk. We would love to write more in Europe. It's not an issue. Frédéric talked about prevention. I think that's the key, right, to insurability. Because if a house today is being flooded once, twice a year, that is not a risk anymore. It's uninsurable. So it needs prevention. We need to figure out, and this is where the effort, in my view, should be from the states, is how can we ensure that these houses become insurable again? But that's not by creating a monoliner in cat. It's not going to solve it.
So the message is that Europe should stop thinking about doing your job and let you do it really well. Let the market.
That's a better way to say.
Let the market do the competition, and then focus on doing the state prevention work and improving the houses, the building codes, the ways of addressing these risks. So we need to
listen.
Be
There's an example in Switzerland. Maybe some have heard this little village in the mountains, and it became clear to the authorities that the mountain would come down and will cover the village. So what do you do, right? I mean, what do you do? That you know it's going to come down. Of course, you don't let the people there, right? So you remove them. And now what had to happen happened. The whole village has disappeared, and people are safe. The village is destroyed, but that's natural catastrophes. You cannot avoid it, right? So you have to face reality that floodplains become more and more flooded. The answer has to be a different one, right? To the past. You have to find different ways tomorrow.
It takes a significant amount of courage for a politician to look at his electorate or her electorate and say, I know you like your village. I know you've lived here for generations. We're going to move you, but it's for your own good. Please vote for me again.
Yeah, I agree. But, you know, we all have our jobs, isn't it?
Ah, yes. Well, turning maybe to a slightly safer topic then, at least from a politician's perspective. We've talked a lot about innovation. We'll also talk about it later today. Turning to innovation within our sector, because we know that it's essential for future resilience. Where do you see the barriers for innovation within our sector? And maybe importantly, where are the most exciting opportunities? We've talked a lot about AI in the last 2 years, but is there another new innovation, new technology that we've overlooked?
Yeah, so I think that given the changing risk landscape, insurance, reinsurance is forced to innovate constantly because there are new risks emerging. We have to find new solutions. I mean, electric vehicles didn't exist 15 years ago. Now they exist, so we have to find a way to insure these. We know that the risk profile is different, needs are different. So that's the way for us to innovate. So I think it's an industry that innovates. By the way, I don't blame regulation for it, but I will say that because it is a regulated environment, it does set the entry barriers a bit higher, and in my view leads to a little bit of complacency across the insurance reinsurance industry because it's not that easy to replace it. So we have seen a lot of attempts with new startups, but actually it's not more than needle sticks to an elephant, right? It didn't really have an impact, and ultimately they are getting bought by incumbents. So I do believe that the devil is more inside, and it's more called complacency. It's an industry that has been faring relatively well, and it's not the burning platform to innovate is just less in our industry. So I think the only way to really create more and more profound innovation is to kind of shake it up a bit. But again, from outside in, it's going to be difficult because of regulation. I'm not blaming regulation where it exists, and it has to, but yeah, it makes it harder for newcomers to come in and revolutionize the model.
So you're calling for the industry to step up on innovation?
Yeah, I think we should step up. I think AI is a great opportunity to prove that we can do more profound changes. I think that AI enables an industry, and I won't repeat what Frédéric said, an industry that is all about data, isn't it? I mean, it's just particularly reinsurance is all about data. It's all about experts. We have thousands of people from the best universities in the world. They're all scientifically trained in mathematics, in actuarial science, or anything else, right? So these are all people that will embrace AI very, very positively. We will put it at work, on operations. We will put it at work on underwriting, for example. I think that the underwriter of almost today already, but definitely tomorrow, will be one augmented by AI. I think that soon people will not read a contract anymore. That will be done by the machine, compared, and I think also that part of the pricing will be done automatically, helped and supported. It doesn't need always AI, understand me well, but AI can add to this process. I have, for example, was leading a project years ago. It costed about 15 million each year and it was all about something. We wanted to solve a problem on the contractual side, and after about 4 or 5 years spending at least 50 million, we got to an okay point. Now, the same attempt started 3 months ago with the help of AI, and in like 1-2 months, we got further than in 5 years before. So that just shows the power of AI, and I think it's going to be not so visible to the world, but it's going to allow for more efficiency, better, even we will be able to remove the boundaries of insurability and all of this. I think it's gonna really help the industry to get more efficient and ensure also insurability.
I love the fact that you are calling for the industry, but you're also walking the walk, so to speak. So it sounds like you've been shaking things up quite a lot in SCOR in the last couple of years. If we turn to the industry, one of the components, we've got almost 60 people sitting over there thinking about what they want from the industry, but also thinking about how they perceive the industry. We can't do all of it with AI. We still need to attract some talent, some young people. How can we do more to make them understand not only our products and what we can do for them, but also the impressive opportunities that we as a sector offer for them?
Yeah, it's when I will speak mainly for the reinsurance industry because that's the industry I know the best. But it's fair to say that you very rarely meet a person and then you ask, why did you join reinsurance? Was that your dream as a boy, right? So I can tell as a boy I had the usual dreams of, pilot. Yeah. I know my family says I wanted to become a bank director. I have no idea why.
I think you got better.
Yeah. I don't know where they get this from, but anyway. But you can see, right? I got to know reinsurance by complete coincidence. But once you're in and you work on incredibly relevant topics, you work with global teams, global experts, fully collaboratively. You work with great clients, I mean, all these insurance companies, and you have challenges all the time again. I mean, it's such an amazing environment, so dynamic and intellectually stimulating, but also I think you create friendships across the world. It's super exciting. I have no worries for the reinsurance industry in terms of talent attraction. Also, when I see just the interest coming in our way, it's really very positive, and I think it will go from strong to even stronger in the years to come as resilience becomes more of a purpose to people. And resilience is the purpose of the reinsurance industry. It's what we do.
So as resilience becomes hip, we will become hip.
Yes.
Okay, that's interesting. Let's talk about that one next time. Last question, because we're running out of time. So you've been a leader in this industry for a very long time, Thierry. What are the main lessons, takeaways, and for some of the people here who are maybe not as shooting above bank director as you are, any piece of advice that you can offer to the young people, but also the ones that are in track?
Yeah, I think that we are clearly in a world of volatility and uncertainty. So I think what is important for companies is that you delegate power, you delegate decision making, you empower people, and you make them, however, also accountable, right? I think that's important. So you cannot keep everything central. You need to delegate, right? But you cannot delegate blindly, right? And you have to tell people, but you are not just, you don't just have this power, you're also accountable for what you're doing. So if you think as a leader in this environment, you know it all, then I guarantee you're wrong, right? So as a leader, you have to rely on your people. So you have to instill trust in everyone. People must feel that trust, that empowerment. They also must feel that, yes, sometimes things go wrong, but the next time we try it, we will avoid the same mistake. I do believe, so trust, delegation, empowerment, accountability, these are the big themes today. But there's one thing that is particularly close to my heart. It's all about resilience. So reinsurance is all about offering resilience. I think it starts with making sure our employee have that same resilience, because I do believe that when you when you live in a world that is so uncertain, that the workplace should be able to provide some of the resilience that today the geopolitics don't give. So we spend quite a bit of time around things like caring, for example, in companies. We are not an NGO, but it becomes a theme that is important.
Thank you very much, Thierry. I think there's a lot of food for thought in what you shared with us. So please join me in thanking Thierry for his insights.
Thank you. Thanks, Thea.